Welcome back, everyone. I hope we are all doing fine and well today. So, if you've been following the market very closely, you will notice that we've had a uh, very calm market these past few days. Okay, especially last week, we've had a very quiet market. As you can see, we have the DXY right here. You know, technically playing as forecasted last week. The forecast last week was we are expecting it to at least touch the 100 region right at the top here before we can now anticipate for a further push to the downside, or maybe, okay, peradventure, we're going to get a rally harder to the upside, maybe around 105, or even all the way back to, I'm talking about 102 right here, or even up to 105, okay? However, personally, I would say that I'm expecting it to kind of take another nosedive when it gets to 100 region right at the top here, based on technical perspective, by the way, okay? But today I want us to really start with seasonality, okay? Let's start with Bitcoin, because when you take a look at the Bitcoin chart, let's actually quickly branch there before we jump into the further juicy stuff today. You will notice that in the last couple of weeks, since October 11th, right here, okay, since October 11th right here, we've been trapped. I mean, Bitcoin has been trapped inside this particular range from 103k to 117k. It's been trapped right here, and that has gone for like 2 to 3 weeks now, over 2 weeks now, and that is actually very significant, because when you take a look at what happened in June, okay, you will see that we had something very similar to that when we had a little bit of a trap around that 100k, okay, and something like 110k. This lasted from May to something around late June, early July, something like that. And when you take a look back again on Bitcoin, you will see another momentum that kind of looks like that. Okay, right here. Okay, you can see we have another range here. As a matter of fact, we have something quite similar to that right here. And what you would normally see after an intensive range like this, okay, a well prolonged range like this, it's a blow off. Okay, the market just blew out to the upside. So, technical analysis, technical strategy, technical structure, we are made to believe that what has happened in the past would likely happen again, and that is why we are all trading technical analysis. That is what makes the markets quite affordable for most of us, because we believe that, or even tradable. We believe that what has happened before in the past will technically happen again, or potentially happen again. And now that leads me to seasonality. When you take a look at the seasonality right here on Bitcoin, you see this bullish trajectory, right, month on month. Okay, January, February, March, April, May, June, July, August, September, October, November, December. This is what it has done in the past, okay, in the last 10 years, okay. So you can see the momentum slowly gravitating to the upside. And doing towards the last 4 months in the year, September, October, November, December, you see that Bitcoin has a decisive rally to the upside, okay. But since September this year, on Bitcoin we got a very decent rally in September, which is right here. May September again, right here. We got this very decent rally and gave us a fresh all-time high at 126k, roughly 126k. And since then, we have September and early October, we got this massive dump, okay, due to, which we can kind of like attach to the fundamentals. I mean, the news are, or let's just say what Donald Trump said about China, that they're going to impose 100% tariff on China. And then Chinese President Xi also saying that he's going to restrict China from exporting the rare earth metal that they literally control, okay. He's going to restrict it from being exported to almost all parts of the world, which is kind of very crazy for most companies, especially the AI companies and the tech companies. And this is what we can kind of, okay, connect to this massive dump in the market. That was around, I think, over 19 billion or so, 19 to 20 billion liquidation. Okay, long trade has got liquidated right there. I mean, we all heard about everything that happened during that time. Okay, it was one ridiculous Friday like that, and the market just dumped. Boom. Okay, everything in the crypto market just dipped 70%, especially the altcoins. Every single thing just crashed. Literally, that's what we can call crash. All right, but not on crypto, not on Bitcoin. Excuse me. Bitcoin did not crash, but all the altcoins technically crashed. Okay, you see negative 70% drop, 60% drop, 58, 90, 70. Some did 85% drop. Okay, from where they were to where they actually got to. It was crazy. So now it is quite decent when you take a look at seasonality, okay, and the actual momentum. This is telling us that yes, what has happened in the past will likely happen again, but probably not the same way. So especially this Trump regime, Trump administration, the market we've been trading is quite different from what we traded last year. There's more volatility, more pump and dump kind of momentum, more crazy rally, more massive dump in the market, and we've yet to enjoy it or probably live through it, because it can either work for you or work against you. And we just have to better prepare our mind as we approach the last lap of the year, which is November and December. Okay, so personally on Bitcoin for me, based on seasonality, based on my technical perspective, I took a very fresh buy on Thursday right around here, and I would be expecting it to possibly come all the way back to 118k. Okay, before we could get another drop to the downside. Okay, that is where I'm at right now. On a long-term perspective, I would love to actually take a buy on Bitcoin right here at 100k to see if we can get a fresh all-time high before the end of the year. Because what we are made to understand based on seasonality again is during the January February session, we always have like a massive dump in the market, and the March and April also kind of look like a pullback kind of session. When you take a look at June and July, also kind of look like a kind of pullback. August and September, you can see where we have kind of pullback. So Bitcoin most likely have like the last 3 months of the year, October, November, December, to rally. And the other ones probably range small momentum, especially April, May, maybe a small rally to the upside. And then June, July, if you use it to correct, then maybe August rally again. September, use it to correct. And then October, November, December, we got those, what do you call it again, bull run, technically. So I am spending a little bit of time on Bitcoin today because we should diversify a little bit from just Forex and gold and everything like that. We should diversify. Okay, we trade everything over here. So I think it's just fair if we can do that. So another thing I want us to take a look at is let's take a look at gold. Okay, that's the next interesting thing, right? Where is gold? Let me type it right here. GOLD. So right here we have gold. And let's take a look at the seasonality of gold the last couple of years. Now, when you take a look at the gold seasonality in the last, this is 10-year average performance. Okay, in the last 10 years, the average performance of gold in the last 10 years, you see that momentum starts in January, February to April, and then we get a massive range. And afterwards, another rally to the upside. And in August, September, we get a pullback, right? But this year has been quite different because since June, we've been seeing a massive rally. As a matter of fact, since July, we've been seeing a massive rally in the price of gold. Okay, so that alone kind of speaks volume. So during the last part of the year, what do we normally see on gold right here? We see pullbacks. Okay, October, November, December. What do we see? We see pullbacks. We see some weakness in the price of gold in the last 3 months of the year. So what happened on Bitcoin? Bitcoin rallied in the last 3 months of the year, and gold dropped in the last 3 months of the year. So that is a little way of painting a picture. Okay, this is what has happened in the past. This is a consistency of monthly chart. Okay, you can do it yourself. Just go in the last 10 years. Just go to 2015. Okay, that was the last 10 years, right? Yeah, 2015. And take the chart to monthly time frame and just look at every monthly chart or every monthly candle, how they close. Okay, and you see that October, November, December, on an average, they close bearish. I did that. Okay, I'm not sure if I can get the picture of the actual data that I did myself. I started from 2010, and I think I did it to like 2020 thereabout before I just kind of gave up and I actually just bought Edgefinder then because I was trying to do it myself, but it was very stressful, so I had to just buy Edgefinder. So it is all done here, so there's no point in spending hours on hours trying to get things that's already been done somewhere else. So that is why. So if I can get the whole picture so you can see it, I would see if I can get it. I think it should be kept in my journal. Yeah, somewhere around there. So we're going to take a look at that later. So now, annual seasonality, back to gold, we are expecting a little bit of a weakness, okay, in the last quarter of the year. So now that takes me to what we have here on the top setup on Edgefinder right here. Let's actually go to top setup simple. Okay, let's go to top setup simple right here. So we will have a more simplified, more simplified chart. Excuse me, I think I removed something from the category. I removed indices. So let's actually add indices back. So right here you can see we have gold reading bearish. It's called -6. And now let's go back to the charts, the gold chart, because this is very interesting data that we have to pay close attention to. So let's go to gold. Where are you, gold? XAUUSD. So here we are on gold, and you can see what's happened in October, right? October right here, we started seeing a massive dump in the price of gold. Don't forget, this is the daily chart, daily time frame. All right, so gold, we saw this massive dump in October, and then since then we've been seeing a reduction, or a slight weakness in the price of gold. Generally, I'm still very bullish on gold. I want to buy. As a matter of fact, you can see this particular thing right here. That is my buy entry on gold, and this particular one at the top here, that is my short entry on gold. And when we get to the chart fully, I will simplify everything for you so you understand what I'm trying to say right here. So back to what I was talking about when it comes to seasonality. As a matter of fact, let's take a little dive back to 2020, 2024, right? To see what happened in October, November, December. So this is October, November, December in 2025. And you can see what we got. We got a rally in September to the upside. And averagely in October, we got a massive pullback. I mean, the mid, October, early October, we got a pullback, then another rally to the upside. And what happened immediately in November? November just dropped everything down back to the September low right here. And what happened in December? December just went and faded out. Okay, this is the whole of December. It just faded out. And January happened again, and we got that pump again. So, but what is significant is this particular move right here, which is in November. And again, I was talking about seasonality earlier, and the one I've done myself, you can see this is trading outcome, blah, 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 the story right there, seasonality, I did all this myself. And you can see I started in 2010, this is XAUSD right here. And I was talking about, this is October, November, December. On an average, you can see that in October, we always get like 1.18% bullish momentum, which is always up. And even in September, don't forget the last quarter of the year, I was talking about gold right here. The last quarter of the year, in September, we always get like negative, on an average, we had like negative 2.0%. In October, on an average, 1.18%. In November, let me delete this so we can see this thing very clearly. Good. In November, we got negative 1.20%, and in December, on an average, we got like positive 0.5%. So that means in December, we'll likely get a range, right? In November, it's going to be a nosedive to the downside, all bearish, right? And October, slightly a bullish momentum. I'll probably get corrected a little bit. And in September, it's going to be a massive nosedive to the downside, okay? And you can see that we saw that happen this month, last month, which was October. October was actually very bearish. This time around, it was pure bearish. I think September was mildly bearish, but we didn't really get that massive bump like we did in October. Now we are now in November, so we should actually just watch out for the surprise and every other thing that will be coming our way in this particular month. So I would love to talk about seasonality, but we don't really have that much time, so I need to move on. Okay, but this is something you can do yourself. I did euro dollar. I plan to do pound dollar. I just gave up. Okay, I had all the plan to do everything, but I just gave up personally. So if you need something like this, you can come to my DM and share with you. Then all you can do it yourself. It's quite simple. Okay, but this is a template that I used back in days. Okay, and it was actually very good. I did another one for COT. I did a lot of work back then. I did a whole lot of work. COT report, trying to do it myself. It was very tiring, very, very boring. Okay, you spent hours on hours going through the CMSCC or is it, commodity or whatever. It was very boring website, very weird to even look at. So I just had to just purchase Hedge Finance. So far, it has been very awesome. I must say, in all fairness, Hedge Finance this month has been in October has been very weird because most of the top setup, we didn't really get much top setup and the market sometimes just go against it. So October was one of the very best months for me, I would say that. But I'm still holding on. You have to keep trading the system, and most especially because I didn't really get good entry on all my indices pair that I took Nasdaq. I took Nikkei. I took a buy on Nikkei. I took Nasdaq, or is it Nasdaq or Dow Jones? I can't really remember. But of course, instead of me racking my brain, let me just show you that to you. It is Dow Jones US 30 right there. So I took a buy on them, but my entry, my risk, let me say my position is actually very small, extremely small, because I was expecting a bigger pullback so I can add to the position, but I didn't get that. This is like the fourth time I'll be trading indices without getting a very solidified risk management plan on them. Okay, it's awful. Okay, it is very painful because I could have made a ton of money right here, but I wasn't really making as much as I should. So that was a pain in my bum, but there's nothing I can do. The same thing is happening to Nikkei. Nikkei is actually blowing off like very hard, very harsh, and I love it. Although, again, I didn't get that serious pullback that could help me, maximize the momentum so I can take bigger risk. Or let's just say moderate risk. I risk 0.5% of my capital, okay, of my balance. Let's just say balance, 0.5%. But on this particular trade, I was only risking 0.2%. It is too small. 0.5% is small, but 0.2% is extremely small. I was even ready to go like all the way like 0.8% on this one because I don't really go 1% like that because it's gonna probably just because I'm trading a couple of prop accounts, funded accounts, and I need to be careful, okay, of drawdown on the rules. So you have to be cautious. So 0.5% keeps me in a very sane mode, and peaceful mode. So it just makes everything cool. But when I don't get a better entry like this, it just makes all the effort, all this rally, like put to waste. And when you're taking some trade and now closing you out in like actual minus 0.5%, and then you just feel discouraged, something like that. So it's been a lot. Personally, October has been a lot. But we keep moving on. Okay, nothing we can do about that. So back to the top setup right here. We have China 50. Very bullish call 12. I had a plan to take a buy on this one. We're going to discuss later. Nasdaq is nowhere to be found now. We can't touch Nasdaq. It's too high. Okay. SP500 the same. We can't touch this either. Okay. Way too high. Bitcoin, I took a buy on Bitcoin, I think on Thursday last week. See how that goes. Okay. And we've also discussed the seasonality. It might work, it might not work. Okay. But based on technical perspective, a little bit of fundamental, a little bit of sentimental, seasonality, everything kind of points to me buying. I just took the buy, and the technical actually makes some sense. So buying from what? Buying from demand makes absolute sense. So I just figured and just take a buy. Already have a buy on Nikkei. You can see US 10 Treasury bonds or whatever it's called. Reading bearish, we're going to be talking about that. If you're interested, we can take a shot on that. Gold, we're going to be talking a lot about gold today. So let's keep a close eye on everything. Now, based on economic surprise middle right here, we have dollar is still averagely bullish, pound also averagely bullish, euro slightly bullish, okay, yen pretty much bullish, kiwi on average, card pretty bullish, Aussie quite bullish, Swiss getting bullish. Now everything is bullish right here. It's weird, right? All the major currencies are bullish. I guess that is why I couldn't really lay finger on the forex market. I took pound Aussie, I took a buy on pound Aussie, and it just went down. Pound card, it just went down. It was crazy. Okay, it's like I've never traded forex market before, but there are times like this, right? So I'm just like kind of like just watching all of this right now, and I'm literally just scalping both. That's what I did. I scalped both throughout last month, and I mean last week, excuse me. I wasn't scalping like that. I was intraday, like a day trading kind of strategy. That's what I do. I trade on 5 minute time frame, wait for a couple of hours, makes sense. 1%, 1.5%, 0.5% profit. Have the trade close 2 or 3 times. I'm done for the day. Okay, I only hold it for London and New York session only because why? The forex market, the momentum, the old swing positions are not doing very well. So I just have to like keep myself busy on that day trading thing. Okay, so that's where I'm at right now. Well, you can see economic surprise is not looking the best right now. So let's just keep a close tab on all of this. All right. And when you take a look at the US economic heat map as well, everything looks quite decent on the US economic heat map front. But above all, I will still say that we should stay very cautious in how we approach the US dollar. The shutdown is still very much active, although we now finally had a fair or a temporary agreement, a 12-month temporary agreement between China and US. Okay, the trade war has been downsized right now for like a year. So that's what the plan was. They're going to abandon all the tariffs and they're going to do business the way it has always been done for the next 1 year. After that, they revisit it. Whatever they come up with, they're going to let us know. All right. That's the summary of Trump and Xi meeting in Busan in South Korea, at Busan in South Korea. So that is where we are right now on the geopolitics trade war, the largest trade war in the world currently is China and US. Every other one are just, they're going to figure it out. I think there's still a little bit of a record between Canada and US. We're going to get more of this on that as the weeks go by. And I think the rest are just been pretty much settled, I guess. So let's just keep a close eye on everything right now. As far as US economic case is concerned, I would say that I have a good solid buy opportunity, or let's just say buy setup on EU and GU, and I'm looking to short USD JPY and USD CAD. All right, but right now, USD CAD. But right now, it is not looking the best. So I'm just gonna watch out on this because I took a buy on USD CAD. I kind of closed this very early because I don't really like it. And we also had the Fed also cutting rate, kind of signal, and Powell was quite bullish. Okay, it was hawkish on the economy, which is exactly what I was expecting of him. He has to stay hawkish. The labor market is still quite stagnant. We've not really gotten any active data. We've not gotten any new data since the 1st of October that we got ADP. And it's been over a month now, over 30 days that the Fed didn't have any updates on the labor data, and some part of the inflationary data are also not been released. GDP quarterly are not been released. Manufacturing and service PMI also are being stalled. So everything is still being delayed, and we are literally flying blind right now. So if dollar has anything to do, now is the time to rally. If you're not going to rally now, maybe it's going to drop and dump faster in the coming days. But so far so good. The Democrats are still holding Republican hostage on the aspect of shutdown, the government shutdown. So you can follow that on the White House website or whatever, or X. But I don't see anything happening or anything changing in the next couple of days. So let's just keep a close eye on everything. So that's that on that. We talked about economic seasonality. Now let's talk about the economic calendar, where the data we have coming this week. On Monday we have the Swiss CPI month for month, expected to kind of like increase by 0.1%. That's quite decent. If we got these, then you CHF JPY will fast forward to the upside. USD will drop hard. So pay close attention to that very, very closely. It's going to be very wild. And I think we should also talk a little bit about inflation. Where is inflation now? Where is inflation again? Inflation data. Let's talk about CPI here. All right. Let's just quickly take a look at the CPI. Consumer Price Index here. And when we get there, when this thing actually loads up, I think it finally loads up. So we can see right here on. Let's go to CHF. Where's CHF again? Is it there? Yeah, it is there. All right, good. So we have CHF here right here. You can see in the since January 2024 till now, we've seen a slight slow reduction or a momentum, a bearish momentum in the price in Switzerland CPI. Okay, the economy is literally being deflated. Okay, I mean it is just slowing down. And when you see the inflation in the country slow down like this, that means there will be what? There will be less interest or less money in the economy because people will not be, I mean, people will have enough to buy enough. Okay, people will spend less to buy enough. Something like that. So the money, the flow of money in the economy will be quite manageable in a way. So less retail sales and stuff like that. As a matter of fact, let's take a look at the retail sales in Switzerland. I think that would be something to actually take a look at. Where's Sweden? You can see it economic map. When it loads up, we're going to go back there. And you can see it's just slowing down, it's just going flat. So that is another reason why we've got a very strong Swede on our hands, because the inflation is actually very cool. I mean, it is just so cold. And you can see the retail sales pretty high, right? Exactly, because when you have enough to buy enough, okay? I mean, when you can use enough to buy just about enough, you will do really, really well. And the economy will actually do amazing. So that is just where we are on the Swiss economy. Okay, the retail sales is going to go up for sure. Service PMI definitely. You have enough to pay for enough of service that anybody can render for you. Okay, so that's why we have a very solidified economy over there. And you can see the unemployment rate as well. It's quite enough. You have enough to employ enough. You can pay them enough to buy enough and survive enough for themselves. Okay, that is not like what they are running in Switzerland, and that's why you don't want to bet against currency like this. You don't want to bet against Switzerland franc. Okay, Swiss franc. It is the worst currency to bet against. You just want to look into buying it against every other pair. Although based on their interest rates, I think they have the smallest interest rate right now after Japanese yen. Where Switzerland again this year, you can see they have zero interest rate, right? They should have zero interest rate. Yeah, they've been keeping zero interest rate since July. Okay, yeah, since July, right here, July, September, November, they've kept 0.00000% interest rate. The next country that is very close to this, keeping such interest rate, is Japanese yen. Okay, so these are things you need to actually pay close attention to. You need to know. And you can see Japanese yen is like, they're like, since January 2023 all the way to March 2024, they kept a negative interest rate. Okay, that means if you borrow money, you will be paid. If you save money, you will pay. It is just crazy. Negative interest rates works more for, I mean, it encourages borrowing than saving. Okay, but now I think because of the the quantitative easing and everything like that, although they want to start tightening now, that's why we got like 0.5% in like the whole of this year. 0.5%, they pay at 0.5%, which is actually very decent. Okay, for the kind of economy they're running there, it is not too crazy. And they have a very nice job data also in Japan. So they can quite afford not keeping so much money in bank and holding most of their money and spending quite decently, okay, because they're actually good people over there and they know how to kind of like live a good life, even with the little they have, which is actually very honorable of them. So that's more like what we have on the inflationary data, the CPI, and the interest rate. And we know the Fed also cut a 5 basis point last week, so just to put that there. All right, and then on Tuesday we have the Australian interest rate. Okay, they are also planning not to cut anything. Now that we're getting the last week weakness in Australian dollar. Though if this happens to be the same, I guess we're probably going to get a stronger Aussie in the next couple of days, because I see what's the name of the Reserve Bank of Australia president? Okay, I can't really remember his name. He's our name, but I'm very sure the whole process is they want to help the economy to grow a little bit, to get some strength, especially against the United States dollar, and make bigger deals with China, which is one of their top partners. Okay, so that is more like where we are right now on the Reserve Bank of Australia monetary policy cash rate, and the rate statement. Everything will be released on Tuesday, but major thing is the decision is that they're not going to copy. They're not going to be cutting rates. So pay close attention to that. Tentatively, we also have job opening coming. I'm not sure we're going to get that, but like I said, it's probably never going to get that on Tuesday. But let's watch out. Okay, it might come tomorrow Sunday and be like, yes, the shutdown is over. Everybody go back to work, and they might just continue. Okay, the Democrat is saying it's Republican. The Republican is saying it's Democrat. You know how politics works. It's very weird and very, very annoying. But it is what it is, right? So moving forward, in New Zealand, we have employment change and unemployment rates coming. It's probably expected to come very good. Okay, employment change is expected to get increased by 0.2%, and unemployment rate is expected to also increase by 0.1%. Unemployment rate increasing is not good for the currency, not good for the economy either. And employment change, quarterly employment change coming up higher than previous is pretty good for the economy and for the currency. So let's pay close attention to that as well. We also have ADP non-farm payroll. I think this one is going to get released on Wednesday. And we have the ISM manufacturing PMIs. Okay, excuse me, the service PMI also going to get released by 4 p.m. On Wednesday as well. The United Kingdom interest rate data or interest rate statement and releases will be coming up on the Thursday. Okay, also they're forecasting an unchanged interest rate. They're not planning to cut rate at all. So let's pay attention to that as well. And later, how it goes. The governor of Bank of England will be speaking from the daily. So watch out for that. Unemployment claim supposed to come out on Thursday. The initial jobless claim is not going to be coming out. So tentative. Can come, might not come. Watch out. And then we're supposed to have the usual NFP and the rest. Well, if they're gonna come out, not sure. All right, because of the short term. So that's where we are right now in the economy. Just watch out for the United Kingdom economy. I mean, the United Kingdom data coming this week. The interest rate data coming this week, and also watch out for the Reserve Bank of Australia rate policy as well. The unemployment and the employment rate, the labor data coming in New Zealand, and then watch out for the Swiss CPI also very important. So that is more like where we are right now on the economic front. All right, so watch out very closely on all of that. So moving to the chart right now, let's start from DXY. Let's start with DXY. Okay, DXY right now is still leaning towards 100 region. Okay, I'm still very much solid on seeing DXY actually tapping back inside this range right here, back to this region. So considerably, okay, I think maybe Tuesday we have get that done, or maybe Monday it will have been done. But what I'm expecting further after the retest of the region is potentially a massive drop to the downside. Okay, a massive drop, an absolute rejection of that region. However, that is in technical perspective, and based on there is no actual fundamentals that kind of support DXY rally or not right now, aside the fact that Fed was very hawkish on the entire economy. So that's more like the only thing we kind of have, the sentiment that comes from the effects, okay, that there, because there's no data to actually back the hawkishness up yet, aside the one that we got since September. Okay, so right now we just have to stay very cautious, because once the shutdown is over, the market is going to fly up or dump to the downside. So you have to be very cautious right now if you're trading dollar. So I would say 100 is positive, maybe drop to the downside or break above 100 and rally to the upside. So, but the caveat is 100. Okay, so watch out for this. Okay, watch out for this particular region. Okay, you can still buy USD card, wait for pullback, USD you can still take some short buy, USD JPY take some short buy. Okay, but just don't go ahead and sleep on that. Okay, anything can happen moving forward. I'm already spending so much time, so let's actually fast forward. I've already told us about my US30 buy, so there's nothing to talk about over there. Nikkei also I'm buying, nothing to talk about. I'm also buying Bitcoin, also discussed Bitcoin at length, so nothing to actually discuss over there, aside the fact that if you want to join a buy on Bitcoin, I would suggest that you wait for maybe a slight pullback back to this region and you take a buy to the upside. Okay, we still have a very solid demand zone right here, or let's just say support zone. So if this particular zone right here fail to get broken to the downside, then we can still anticipate for what? Anticipate for further rally to the upside on BTC, especially back to 116K region right at the top there. So just do it. Just watch out for that right now. All right, so heading back to the next one. So let's start with my trade recommendation right now. Let's kick off with China 50 right here. So last week we saw this massive dump on China 50. As a matter of fact, the pullback was actually very heavy. It dropped from this particular region back to retesting this broken resistance right at the top here. So what is the next call of action? Because of this, I mean, considering the kind of momentum that these particular assets kind of move with, okay, I would say we have a possibility of getting a rejection from this particular region, or maybe it jumps back to this particular zone right here, this demand zone, and we get a move to the upside from there. But overall, I would be looking to buy Chinese 50 or China 50 this particular week, especially if you can get a slight push back to this particular imbalances right here. So if you can get a move back down here, maybe I will look for buy right there. And I will also be expecting, RSI to kind of like drop a little bit below 50, so it can make a better sense. I would like to buy cheaper on China 50. So pay attention to that. I have the same buyers on Hong Kong 50 as well. Okay, we also got that massive drop. Okay, so from here, this actually has lazied out. Okay, it has kind of like just it's fading out slowly, and I'm really loving the fact that it is pulling back. I just want it right here, or I want it right here, so I can do what? I can buy cheaper. Okay, that is the plan for me right now on these two assets, with China 50 and Hong Kong 50. I would really love to buy them cheap. So we can probably see maybe 29.20 or 29.800 in the next couple of days on this Hong Kong 50. So if you're interested in indices, this might be something you might want to look into. Nasdaq is awful. I'm not going to touch it. It's way at the top. I'm not going to sell it either. So let's just watch out for me. The same thing on SP500. Nothing to actually do on this one. Okay, I've been seeing some analysis on LinkedIn, on YouTube that maybe we're going to get a pullback and something like that. Blah. It can happen. But I'm not going to sell for sure. If I'm going to sell these, it has a break below here for me to sell. Okay, it has a break below there for me to sell. Anything above here, I'm not going to touch it, sell for sure. Okay, you can bet on that. So maybe back here, might be a good place to buy. Okay, back here, might be a good place to buy. All this, the stock market is in a bubble, the AI bubble, the CP bubble, the whatever bubble, it is fine. Okay, I'm not here to speculate on bubble or bubbleness. I just want to trade, and that's what I'm going to focus on. Period. Moving forward, the next pair that would be The US 10-year yield, I said, the hedge fund is suggesting a bearish setup on it, as you can see right here. Bearish is score of -5, which is very good. So let's watch out on, let's check the chart, okay, on this one. Personally, I would say the bearish momentum is actually quite obvious. As you can see, we've seen higher low, lower high, lower 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 low. Now we're getting a fresh new lower high right here. And the next thing we can expect is lower low, considering that the Fed is still planning to cut one more rate, okay, before the end of the year, okay. It is not certain yet, but there is a possibility of that. As a matter of fact, I read a post from Donald Trump that it's either the Fed is very bad or is just an evil person. I'm definitely going to tag his quote. If I don't get that quote, I'm going to cut this thing out of this video because that would be whatever. But I think I saw something like that. So if you see me saying this, then that means the picture is still at the top. So just what Donald Trump said. So that and why did I say that? Because you can see that the Fed is not cutting as much as Donald Trump wants it. Okay, Donald Trump wants 2% rate cut. Okay, 2.5% rate cut. That's what he's expecting. Well, I guess he's not getting it. And Trump don't like when he doesn't get what he wants. Okay, he doesn't like it. So I guess maybe Powell will budge and we're gonna get another rate cut at the end of the year. Okay, maybe this month on December, possible. Okay, December, excuse me. Maybe we're gonna get it. Maybe not. I don't know. Well, we have to watch out for that. All right, so that's where we stand on 10 years yield. Okay, it's at a very decent region for us to actually short. But I wanted to come back to this particular zone. Let's take it to 4-hour time frame so we can see very clearly then. I wanted to probably rally a little bit higher back to the zone so I can take a short from there. Okay, as you can see also on RSI, it is awfully at overbought, so which is also very good for the setup. Okay, very good for the setup. So let's just watch out for now. However, if you break below here, pull back like this, I wouldn't mind selling either. Okay, I want to see a setup like this, the usual change of character stuff. Okay, if we get something like this, I would sell. However, I want to see something like this. Again, change of character, then I will sell US 10. Okay, that would be my plan on US 10. Pay close attention to that as well. On gold is quite interesting. Let's take it a little bit to a smaller band. Let's take it to 8-hour time frame. So right here on 8-hour time frame, okay, you can see the momentum is slowly revealing itself on gold. Okay, gold is slowly revealing itself to be quite bearish for now. All right, you can see we've had lower high, lower low right here. We have lower high, lower low. We have lower high. However, I want to see a little tap of this particular supply zone. Then I want to see gold actually drop back on its feet, to like maybe 3,750 region. Okay, so screen because they like it, or screen because they completely hate it. Why? Because they're already buying from here. I'm just being a technical analyst. Don't freak out. Okay, just let's watch out. So personally, there's a possibility to sell maybe a close below here, possible short, or maybe we get a push to this particular region around that 4,100. Okay, and then we get that massive dump again. Back to again, don't freak out. 3,750. Okay, don't freak out. All right, so that's where I'm at on gold because I know gold is a very sensitive asset we even talk about right now. We have so many people buying, people started buying from here. So because of this drop, and they are very hardcore buyers of gold, they probably took another buy from here. Now someone is saying it's gonna sell to 3,750. They would not like it. I would not like it on the person. So I'm sorry, but I'm just being a technical analyst. So let's move on. All right, but if I'm gonna buy gold, confidently, I'll wait for this. Change of what? Change of character again. Push, bomb, then I want to buy. Okay, you can see we have the momentum. Okay, we have higher high, higher low, higher high, right? That's what I'll be looking for to buy gold. But what we've seen so far is lower high, lower low, lower high, lower low, lower high. What next? Lower high, lower low, right? So watch out on what? That's what I'm gonna say. Now back to Ethereum, we've seen a little bit of a reduction in the price of Bitcoin. So you just expected to kind of like watch out for that on Ethereum as well. And so far on Ethereum, I'm thinking, okay, for me to take a buy, I'm very bullish on Ethereum. As a matter of fact, as an investor of Ethereum, a big fan of Ethereum, I started buying Ethereum from here. I took another buy right here. I took a buy from here. Now I want to buy again from here. I'm going to buy this as a spot asset. At the same time, I'm going to trade it as CFD. So that's just my basic plan on Ethereum right now. So let's watch out. The plan is to see that it comes possibly down to this region. Okay, this 3,700 to 3,650 region. They get it back to this region, I would consider buying, and I will be targeting $5,000 in the future. All right, and my stop is going to be probably at 3,290. Let's just say 3,300. Okay, that's going to be my stop loss on this particular one as a CFD asset. But a spot asset, we don't set stop loss, so you just have to leave it and hope and rally, which 75% of the time it does. So let's watch out on Ethereum. Okay, moving forward. So that's my plan on it. I hope you understand what I just explained. If you don't, just fast back. Okay, backward fast, and you listen to it very well. Now moving on to USDCHF. USDCHF is approaching a very delicate supply zone at the top here. Took a buy here, took some profit here. I wanted to buy here, but I just gave up on it because of the Feds and everything like that, mid spot and everything. I don't really understand the sentiment around it. And it doesn't look like something I really want to buy. I don't fancy it like that. I don't like trading in a range. You know me, okay? I don't like a range band like this. It gives me epoch, okay? What I want from USDCHF right now, if I'm going to trade a range, I don't like mid range. I like sell from what? Sell from supply and buy from demand, something like that. The mid range is not my go-to. Okay, I don't like it. Period. So if I'm gonna sell USDCHF, I want to see a little bit of a sweep to the upside and then a rejection, something like this. Now I'll start selling USDCHF. Okay, selling. And don't forget, we also have the CHF CPI month on month coming, and it's expected to be to be pretty strong. From previous 0.2%, we're expected to have negative 0.1%. Okay, negative. Negative 0.1%. Yeah, so that's an increment of what? Plus 0.1%. So that is quite good for the currency. So we might end up getting this if it happens to actually come this way. Now, it can be very crazy that if we get like 1% or 0.2%, excuse me, I mean 0.1%. Okay, if we get like 0.2% or 0.1%, then it's going to be very wild. Okay, CHF will fly up like a wild animal, and USDCHF will crash, literally crash like a moron. So watch out for that very closely on this USDCHF. USDCHF is probably going to be the kind of pair you look into this week. Euro USD. I'm very, very cynical on this, okay, because this is a very serious demand right here that Euro dollar is actually breaking. So that is not very cool. I don't like when the daily time frame structure is being violated. I don't like it personally, but there's nothing I can do about it, so I'm just going to give it a go. But when you take a look at this momentum right from the top here, you see that we've had a very succinct and precise bearish momentum on the price of the Euro USD. So personally, I would just love to follow suit so I can sell, short sell, and then buy from here to go forward. I would love to buy from here and I would love to sell from there. So if we get a decent break to the downside, a pullback, I would love to sell Euro dollar and just to buy from 1.1395. Okay, that's where I would love to buy Euro US dollar from. As a matter of fact, it's exactly going to look like this. Okay, it is going to look exactly like this. So let's pay full attention to something like this. It's always going to be slightly below here. Anything around this region, that's where I'll be looking to buy Euro USD. So watch out very carefully. Okay, watch out very carefully on Euro dollar. So anything around that region, you can see the zone there. Okay, excuse me, let me drag that up a little bit so we can get a precise number. Yep, period. So simple arithmetic, I would say from something around 1.1458 to 1.1395. That will be the region I'll be looking to buy. And my stop loss will be at 1.1380, period. All right, that should be around 200 pip stop loss thereabouts. So I will be looking forward to trade gold. I mean, to trade Euro dollar from there. However, if you get a deep pullback, okay, on Euro dollar, I would love to sell from this particular region right here. I feel to sell from here because it was actually quite crazy in the valley, and I was a bit distracted. I wasn't even trading at the time. All right, it was quite close to my birthday, whatever. But I missed out on this 125, 30 pips thereabout. But if we get a breakout pullback, yeah, I would be selling Euro dollar. So watch out for that as well. Okay, so lastly, let's talk about WTI, and I'll be off your air because we've already spent so much time together today. So moving forward, WTI, I took a short sell right here, kind of got tapped out around here, so that's a done deal. Okay, on this WTI short, I'm actually not very comfortable selling it. And now the plan is pretty simple. As you can see, this buy that I took right here was a good one, which is fine. Now I want to see a breakdown. Okay, a breakdown. Come back to this region, let's buy from there. Failure to do that, break above this particular structure right here. This demand, or let's say this support on resistance. Okay, I want a break above this particular structure, or let's just say key zone. Okay, pull back and then look for buy opportunity back to $71 per barrel on the WTI. So that is where I'm at right now. Okay, it either comes straight down here, we look for buy opportunity, or we break out. Without coming down here, we break above there, pull back, and then we look for buy around the $62 per barrel region. That would be where I will be looking for buy, and I will also be looking for buy right here. So this region are places for me to look for buy on the WTI. So that is that on that. I have so many pairs I want to discuss, but time will not permit me. I have Aussie dollar, I have Aussie yen, I have so many things I want to discuss, but we're very time, right? Very time. So guys, I will see you in the next one. Please stay safe. Trade it very cool. Don't be in a hurry to enter a position. Don't let FOMO take control. And don't forget to subscribe to my channel. Don't forget to follow me on social. I'm on IG, I'm on TikTok, and also right here on YouTube. You can always give a subscribe, like, and share with a friend. I'll see you in the next one. Have a good day.